As John has alluded to, my name's Elaine Dunne and I work in AIB and I look after manufacturing customers. I'm meeting customers every day of the week and really trying to support their lending applications to the bank. So today I just want to give you a quick overview of where manufacturing sits in Ireland at the moment. We'll discuss managing the risk environment within the sort of challenge environment we're in at the moment. We're going to explore some of the funding options that may be open to you depending on where you are on the business life cycle. And finally, if you are interacting with either a bank or an investor, how you can be prepared. So this here just gives you a little indication that many people aren't aware. The manufacturing industry is extremely diverse and there's many subsectors, and I suppose everyone's involved in their own sector as such. This kind of just gives you an overview of what the market share is across the various sectors, and I'm sure you'll agree it's an extremely diverse sector. You're supplying to lots of different markets, lots of different products. Some people are supplying to end users where some people are supplying to business. So there's over 4,000 companies currently operating in manufacturing in Ireland, and it really is an important contributor to the economy. There's about 160,000 people directly involved and about 220,000 people if you take people that are indirectly involved also. 82% of manufacturing occurs outside Ireland, so it is truly a nationwide sector and true contributor to the economy in that way. So for those of you who may not be familiar with the Irish Purchase Managers Index, basically this is an index that measures how well the manufacturing sector is performing, and for those of you that aren't aware, anything over 50 here is actually showing growth, and you can see there for the last 60 consecutive months there's been growth in this sector. But it changes the growth that occurs, and you'll see there after Q3 2016 there was a dip there, and that was really as a result post the Brexit vote. So you can see what's happening outside your business really can impact the growth that's occurring within your business. So with that in mind, you really need to be prepared for what's happening outside your business. And I'm not going to dwell on Brexit, we're all sick of hearing about it. But I suppose if there was something I'd like to draw your attention to, 7 out of 10, the reality is that 7 out of 10 manufacturers do export. 9 out of 10 of these are trading within the UK in some shape or form. So Brexit, regardless of how it may end up looking, is going to impact your business from in terms of your competitiveness within the UK, and also your supply chain disruption, of course. So with that in mind, I think really everyone is at a different stage in how they're going to tackle Brexit and what impact it is going to have on their business. But what I would say is it's really important to be informed and do some scenario planning, and use tools that are available within AIB. We've the Get Ready Brexit Check, which is on our business website. Enterprise Ireland also have a number of supports, and Revenue there are running some seminars on it in January and February just to discuss customs and tariffs and how they may impact your business. So I suppose just to really briefly go over, one of the main challenges you are going to face is currency volatility, and I'm sure you'll agree that it can be difficult to manage your business when you look at sterling. There for the last 24 months has hopped between 83 and 93, and really to protect your profit margins it can be very difficult when you have this volatility in the background. I've done a very sort of simplistic example there of an Irish customer, and they had 50% of their sales going to the UK, and all other things being equal along their cost base. If they had been trading when sterling was at 83, you'll see there that they had a net profit of about 500k, whereas if they've been trading when it's at 93, they actually had a loss. So really what you're trying to do when you're managing your exposure, whether it be to sterling, US dollars, what you're trying to do is kind of have a strategy in place to manage any currency volatility and have some certainty when there's a period of uncertainty. With this in mind, this is something we can help you with. We do have a really comprehensive customer treasury service. Within this, you'd have a dedicated treasury relationship manager. What I would say is these guys are excellent at what they do. They really, really understand what's happening in the global markets, and they are talking to customers all the time. So really, what they can help you with is get some guidance on how you can plan for treasury and your treasury requirements. You can discuss with them how to do some efficient deal execution, and this is a unique thing that our customer treasury service offers, in that you've one AIB business platform whereby you can execute a currency payment and get a live rate as well, which is really can make for efficient and fast execution of a deal. Finally, they offer timely information, and that's around knowing what's happening in the markets, forecasting, and if there's a large currency move, they can send you an SMS if you've interacted with them. They do have a really large suite of comprehensive products, and what I'd say is really do come and talk to them. We're at stand S13 to 14 today, so please do come and talk to us, and you'll be able to see how our business platforms work, etc. So it's not all doom and gloom. Yes, it's really, really important that you're aware of what's happening in the environment, the business environment you operate in, and yes, it's absolutely important to mitigate against any potential risks, but also there's plenty of opportunity and there's a lot of innovation happening, and it's really, really important to know where your business stands and how you can fund some of these opportunities. So really, depending on where you are on the business life cycle, this will really affect the type of appropriate funding that may be suitable for you. So we look there and we see concept and early stage, and usually this sort of funding, seed funding, is the most appropriate. AIB has invested in a number of venture capital funds, and does have a number of, has supported a number of customers in this area. Regardless of what sort of funding is appropriate for you when you're at the concept and early stage, what's really, really important is that you also have the right banking products, whether it be current accounts, currency accounts, or key man policies, etc. But however, if you're a growing and established company, what may be more appropriate for you is conventional bank funding, whether this be loans, leasing, or working capital facilities. What I would say to you is really, really important is that if you do have a funding requirement, come and talk to us early. The earlier you talk to us, we can understand what you're trying to do with your business, whether it be to grow your business, invest in another business, property extension, investment in plant and machinery. If you talk to us early, we can kind of give you the advice that you need. This is really important. Like we look at all the time, what the purpose of the loan is really should be matching the term of the loan that you're seeking. If I was to give you an example of that, is if you're funding plant and machinery, this can be done by way of finance and leasing products. But what you really need to look at is what's the useful life of your machinery, and the term needs to be less than this, or at least or maximum equal to it. If you're perhaps purchasing a property, a longer term would be more appropriate at 10 to 15 years. What I would say is what you're really, really trying to do, and the ultimate objective here with regard to term and purpose, is to make sure that you're protecting the cash flow of your business throughout the term of the loan. And this is important. You want to be able to continue trading, funding your working capital, and obviously increasing your output and profitability. I suppose to give you an example of where this hasn't happened was I looked after a customer there in North Dublin, and they were doing a large extension on their business, and traditionally they'd relied on bank funding for overdraft only and had always used surplus cash to fund any expansion in their business. I spoke to them about possibly leasing or taking out a loan to fund a large investment that they were making, an extension to their business. They weren't keen at the time, and they got halfway through the investment and they actually ran out of cash. And this is a reality of what can happen. They're at the peak seasonal requirement for cash in their business, and they actually couldn't finish their investment and they couldn't fund their business. Now in this case, we were able to engage with the customer and retrospectively fund what they'd invested to date and put it over a term, and it did work out well. But what I would say is if they'd had their time over again, they would have done it differently. So I would say come talk to us early, and there are options there for you. So sometimes conventional bank funding may not be the way you want to go, and what I'd say is there are a lot of private equity firms. There's other options such as mezzanine finance. I'd say just come talk to us and we can make some necessary introductions. But regardless of where you are on the business life cycle, whether you're an AIB customer or not, we have a suite of options that we can help support your business with. So you've decided what you're going to do with your business to expand it or diversify, and you wish to engage with your bank. So really, how can you be prepared to do that? And it can be a difficult process at times, because basically when a bank is lending to you, we're lending on a cash flow basis. So really what we want to understand is your business model and how you manage your business on a day-to-day basis. We want to understand your profitability and your cash flow, and also how you mitigate against risks that face your business, which are definitely inevitable in any business. So the first thing we look at is your track record. And when we talk about track record, we're looking at what your business model is, what sales contracts you may have in place. We're also looking there at your historic performance for profitability, what profits you've generated and what cash flow you have in the future. And this will really get a laser focus from the bank. Also, what we want to do is understand how you manage your working capital. Do you have a peak seasonal requirement? What sort of creditor control you have in place? And also if any reliance on creditors or indeed large customers. Finally, next I'd say is be realistic. And when I'm talking about being realistic, what I mean is if you're expanding your business or if you're diversifying into a different business and you're providing the bank with projections, what really you need to understand is what are the assumptions behind those projections. And by that I mean is what drivers are going to come into the business and what you're using to predict what will increase sales or what will improve your overhead management. It's important to note here that banks are different than investors. We're very similar in many ways, but our risk and return is different, and banks will be a little bit more conservative. So when we're looking at your projections vis-a-vis your historic performance, we will form our own sort of bank case, which usually is somewhere in the middle. One last thing on that I'd say is if you are introducing capital or cash into a proposal, or if you're getting whether it be funding from Enterprise Ireland or another private equity partner, we really need to understand the terms of that finance as well. So sustainability is really important. A sustainable business will generate sustainable cash flow, and this is key for us, and this is what we're really looking for. For a manufacturing business, we really want to understand how you robustly manage your supply chain. You'll hear many people talking about different aspects of supply chain today, and this is really important because it controls your cash, how you spend your cash on raw materials, have you any exposure to commodity risk, how you manage some of the risks associated with having such a supply chain, whereby is there a reliance on an end customer, is there a reliance on a key supplier, and how you'd get around if these risks, how you mitigate really against these risks. Finally is alignment of interests, and this is important. AIB is a relationship bank. We do try and support our customers, and what we're trying to do is understand their business and make sure that they are mitigating against any potential risks. So just 3 small takeaways. You're in the driving seat, you look after your business, and we appreciate that you know what the future success of your business will be and how you want to get there. You need to mitigate against risks and maximise opportunities. We do offer a full suite of banking products, and I suppose what's important for us is that we look at matching the term with the purpose of the debt and where you are in the business life cycle. And finally, we take a sectoral approach. My role is to understand your manufacturing business, and that's one thing I'm passionate about, so that we can absolutely support your business. So, ladies and gentlemen, thank you very much for your attention today. We're at stand 13, and I would recommend you come over and chat to us and enjoy the rest of your afternoon. Thank you.